Imagine a life where you don't have to worry about money, where you can pursue your passions without being tied to a traditional 9-to-5 job. This is the allure of passive income, the money you earn without actively working for it. Today, we'll explore the concept of passive income and its potential to transform your financial future, with insights from the renowned financial educator, Robert Kiyosaki. Who can benefit from passive income? Well, anyone seeking to escape the traditional grind and achieve financial freedom. Robert Kiyosaki, the famous American businessman, investor, and author of Rich Dad, Poor Dad, has been a guiding light for individuals worldwide in their pursuit of building wealth and generating passive income streams. Today, we'll delve into Robert Kiyosaki's latest views and his top 6 tips for cash flow investments that can boost your income in 2023. Before we explore these tips, let's understand what passive income truly means and why it is essential. Passive income, also known as cash flow, is the income that flows in without requiring active involvement from you. This means you can earn money while you sleep, travel, or spend time with loved ones. The beauty of passive income lies in its ability to help you build wealth steadily and achieve financial freedom, in alignment with Kiyosaki's philosophy. In his latest book, The Capitalist Code, Kiyosaki emphasizes the significance of creating multiple streams of passive income rather than solely relying on your primary business for earnings. He also stresses the importance of investing in cash-flowing assets, which generate regular income, instead of solely focusing on investments that may only appreciate in value. Now, let's explore the top 6 assets that can provide you with cash flow for passive earnings. Number 1. Real estate. When it comes to building wealth through passive income, Robert Kiyosaki highly recommends investing in real estate. Real estate stands out as one of the best assets for earning passive income, providing a reliable and steady stream of earnings while contributing to long-term wealth accumulation. Kiyosaki values real estate for its tangible nature, giving investors something they can see and touch, which adds to its appeal.
The beauty about real estate is you learn to use debt to get rich. I'll give you another tip. If you're going to be rich, you have to learn to use debt. It's called other people's money.
One key aspect that Kiyosaki emphasizes is the strategic use of debt to achieve financial success. He believes in leveraging other people's money to become rich, highlighting the power of using debt responsibly as a wealth-building tool. For instance, investing in rental properties, commercial properties, and real estate investment trusts, REITs, are among the avenues Kiyosaki recommends exploring. When investing in real estate, Kiyosaki advises seeking properties in high-growth areas with potential for appreciation over time. He encourages investors to focus on the cash flow potential of a property rather than being deterred by its current reputation. For example, a property situated in a low-income neighborhood could present an opportunity for above-average rental income if it offers convenient access to public transportation. For those without sufficient capital to directly invest in real estate, Kiyosaki suggests exploring real estate investment trusts, REITs. REITs are companies that own and operate income-producing real estate. By investing in REITs, individuals can earn dividends without the need to directly own and manage a property, making it a viable option for passive earnings. Number 2. Dividend stocks. Another excellent method to generate cash flow is by investing in dividend stocks. These stocks provide investors with a share of the company's profits in the form of regular dividend payments. Over time, dividend-paying stocks have proven to be a wise investment choice, offering a steady revenue stream without necessitating the sale of your shares. To maximize the potential of dividend stocks, it's advisable to focus on companies with a consistent history of dividend payments and a strong financial foundation. These factors can contribute to a stable and reliable income stream for investors. However, one might wonder about the risks involved in the stock market. While investing in equities carries inherent risks, it can also be a powerful tool for building wealth, especially for those who are willing to conduct thorough research and invest in high-quality companies. In a recent interview, Kiyosaki shared his experience of investing in an organization that yielded over 20% annually. This example demonstrates the significant potential for earning passive income through equity investments, provided you approach it with careful analysis and choose reputable brands.
And risk is you look in the mirror. Yeah. It's who's looking back at you. You're the risk, not the investment. For example, I invest in a lot of real estate and say, oh, real estate is so risky, so I think I'll buy ETFs. So you play it safe, but you'll learn more by investing in real estate.
Kiyosaki's perspective on risk is insightful, emphasizing that the true risk lies within the investor and their decision-making process. He encourages individuals not to shy away from real estate or other investments due to perceived risks, but rather to understand that a well-informed approach can mitigate potential pitfalls. Number 3. Businesses. Businesses can serve as an excellent avenue for passive income, provided they are set up strategically. The key to establishing a passive income business is to create a system that can operate independently, without demanding constant attention from the owner. This involves starting a scalable business that can generate revenue without continuous hands-on involvement. One promising approach is to venture into the realm of digital products, such as ebooks and online courses, which can be sold repeatedly, ensuring a continuous stream of revenue. The beauty of this approach is that once these digital products are created, they continue to generate income without necessitating ongoing efforts. This means you can earn money even when you're not actively working, enabling you to achieve financial freedom gradually. However, not everyone may have the resources or time to become a business owner. In such cases, there is an alternative solution: passive investing in other people's companies. By becoming a passive investor in a business, you can still reap the benefits of a reliable income stream without actively participating in the day-to-day operations of the industry. Robert Kiyosaki himself is a shining example of a successful entrepreneur who has built a business empire, providing him with a consistent flow of passive income. His achievements underscore the potential of creating a sustainable source of income through passive income businesses. Number 4. Intellectual property. Intellectual property, IP, is a valuable asset that can generate steady cash flow. It encompasses intangible creations like patents, trademarks, copyrights, and trade secrets, which, when legally protected, can be used to generate more revenue. Owning and creating IP can be a significant resource for passive earnings over time. For instance, a patented cash flow game in multiple languages can yield regular income without additional investments. Similarly, authors can earn substantial monthly royalties from book sales and publishing deals.
So when I create that cash flow game, it's intellectual property. It's patented. It's in 50 different languages. Every quarter they send me a check. Zero investment into it. When I write a book, like this book here, I think I make about $600,000 a month just from royalties coming off this book, because I sell the book to a book publishing company, and they send me a check.
IP can be a source of passive income in various ways. For instance, securing a patent for a unique invention allows for exclusive rights to its use and sale, enabling licensing opportunities or selling it outright to a company. A notable example is the Harry Potter series, which has sold over 500 million copies worldwide, continues to generate passive income for its author, J.K. Rowling, through book sales, movie rights, and merchandise. Robert Kiyosaki's success story serves as a testament to the potential of IP as a source of passive income. Creating the board game, Cashflow 101, which sold over 2 million copies worldwide, has provided him with stable passive earnings over an extended period. Even if you're not a writer or artist, you can still benefit from IP by investing in other people's creations. For instance, investing in books or movies can provide passive income through royalties. In essence, valuable ideas, inventions, or creative works that are legally protected can serve as a reliable source of passive earnings. By licensing or franchising your IP, others can use your ideas and products, generating revenue through fees or royalties. Number 5. Peer-to-peer lending. Peer-to-peer P2P lending presents an alternative investment strategy for earning passive income by directly connecting investors with borrowers through online platforms. Although relatively new, P2P lending has gained popularity in recent years. By lending funds to individuals and small businesses via P2P platforms, investors can enjoy a steady stream of passive income through interest payments. P2P lending platforms act as intermediaries, providing a convenient marketplace for borrowers to access loans and investors to earn potential returns. Investors have the flexibility to choose specific loans or create a diversified portfolio, typically achieving higher returns compared to traditional savings accounts or bonds. This investment approach offers several advantages over conventional strategies. First, investors can capitalize on higher returns due to the reduced overhead costs and intermediary fees associated with P2P lending. Second, the opportunity to diversify investments across a wide range of borrowers reduces the risk of default. Moreover, P2P lending supports a socially responsible investment option by offering access to capital for underserved borrowers who may not qualify for traditional bank loans. Various popular P2P lending platforms provide passive income opportunities for investors. For instance, Lending Club has facilitated over $60 billion in loans to borrowers and generated more than $14 billion in returns for investors since its inception. By investing in P2P loans through online platforms, investors can potentially achieve higher returns while diversifying their portfolios across various borrowers. For borrowers, P2P lending offers a flexible and accessible source of capital with lower interest rates and fees than traditional bank loans. However, as with any investment, careful consideration of the risks and benefits of P2P lending is crucial before committing funds. Number 6. Annuities. Are you concerned about outliving your retirement savings? Do you seek a secure flow of income during your golden years? Consider adding annuities to your portfolio. Let's explore how annuities work and their value in your retirement plan. An annuity is a contract between an individual and an insurance company. In this arrangement, the individual makes payments, and in return, the insurance organization provides a regular payout at a later date. Annuities can serve as a source of passive earnings, ensuring a guaranteed income stream in retirement. However, they also come with certain risks. Various types of annuities can be utilized for passive income, such as immediate pensions, deferred annuities, and variable annuities. Immediate annuities offer regular income payments right after the purchase, while deferred annuities provide income payments in retirement, starting at a later date. Variable annuities offer the potential for higher returns, but they also carry more risk due to the income payments being linked to the performance of the underlying investments. In conclusion, generating passive income can complement your regular earnings or establish a stable revenue stream during retirement. By diversifying your portfolio with various cash-flowing assets, you can build a sustainable source of passive income, ensuring financial stability for the future. It's essential to conduct thorough research, seek advice from financial experts, and carefully evaluate the risks and rewards of each investment before making choices. With patience, diligence, and a solid financial plan, you can create a consistent income flow that grants you the freedom to live life without concerns about financial uncertainty. If you enjoyed this video, please hit the like button and subscribe to the channel for more. Thanks for watching, and we'll see you in the next video.